One prompt, 180 trades, and a strategy that still lost money. In this tutorial, we'll use ChatGPT to turn clear rules into PineScript version 6. Ask Claude to audit the code, backtest it in TradingView, export every trade, and let I challenge the result. If you value practical, honest trading tutorials, subscribe. Let's build it. A quick note before we start: the narration is AI generated, but the workflow, research, testing, and editorial decisions are human made. Every core step was recorded in a real account. If something looks different in your setup, leave a comment and I'll help you troubleshoot it. Open TradingView Supercharts, search for OANDA EURUSD, choose standard candles, and set the chart to 1 hour. Using an exact symbol and time frame matters because different feeds can produce different candles, signals, fills, and backtest results. Keep the chart clean before adding the strategy. Now define the rules before asking any model for code. The fast EM is 20, the slow EM is 50, RSI uses 14 periods, and ATR also uses 14. A long setup needs a bullish crossover and RSI above 50. A short setup needs the opposite. Stop loss is 1.5 ATR. Target is 3 ATR with one position. Candle close confirmation. No pyramiding, no look ahead, and no repainting. Paste the complete specification into ChatGPT. Don't ask for a profitable strategy, ask for a faithful implementation of your rules. Required PineScript version 6, explicit inputs, realistic commission and slippage settings, and readable code. Also ask the model to explain every assumption it made. The full prompt is available in the article linked in the description. ChatGPT returns the strategy code. Before copying it, scan the strategy declaration, the input groups, position sizing, entry conditions, and exit logic. Look for unsupported claims, missing risk controls, or values hidden as constants. I can write syntactically clean code that still implements the wrong idea, so code generation is only the first draft. Next, send the complete script to Claude for an independent audit. Ask it to check compilation issues, repainting, look-ahead bias, order timing, stop and target calculations, pyramiding, and the difference between points, ticks, and price. The important part is independence. Don't tell the second model that the code is already correct. Ask it to find reasons a backtest could be misleading, then request a corrected full script instead of partial patches. Back in TradingView, open the Pine editor from the lower panel. Create a new strategy file, not an indicator file. If the editor is hidden, expand the panel and choose Pine editor from the tabs. Remove the sample code, paste the review script, and confirm that the first line declares PineScript version 6. Keep the code unchanged on the first run. Editing several parameters before the baseline test makes it harder to identify what caused a problem. Save the file with a clear name, compile it, and select Add to Chart. If TradingView reports an error, copy the exact error message and its line number back to the model. Don't paraphrase it. Once compilation succeeds, verify that the strategy appears on the chart and that entry and exit markers are visible. Now inspect the chart, not just the report. The orange and blue lines are the fast and slow EMA. Trade markers should appear only after confirmed crossovers, and exits should match the ATR rules. Zoom into several trades and make sure the markers don't move when new candles load. Visual inspection can reveal logic mistakes that summary statistics hide. Open the strategy settings and review inputs. Confirm EMA 20 and 50, RSI 14, ATR 14, stop multiplier 1.5, and target multiplier 3. Inputs should expose the values you intend to test without silently changing the original strategy. In properties, set a realistic initial capital, order size, commission, and slippage. These assumptions can turn an attractive report into a losing one. Don't choose values after seeing the result. Record them before the test, and use settings that reflect your broker and instrument. A backtest without realistic costs is evidence from a market that doesn't exist. The overview gives the first honest answer. In this run, total profit and loss is minus $34.18 or minus 0.34%. Maximum drawdown is $57.64. There are 180 closed trades. Only 32.22% are profitable. Move through performance analysis instead of stopping at net profit. Gross profit is about $205, while gross loss is almost $240. The commission load is 8.74%, and the average trade is negative. Growth and decline also show a long drawdown period. A small drawdown percentage does not rescue negative expectancy. Trades analysis shows how the result was produced. Compare long and short performance, the distribution of wins and losses, streaks, time patterns, and average profit versus average loss. Here, the average winner is larger than the average loser, but the low win rate and trading costs still produce a negative outcome. Use the list of trades to audit individual executions. Check entry time, exit. Download the trade list as a CSV file. This gives the next model trade level evidence instead of a screenshot alone. Keep the original file, note the test window and settings, and don't manually delete losing trades. The point is diagnosis, not polishing the result. Start a new iChat and upload the exported CSV. Include the strategy rules, symbol, time frame, initial capital, commission, slippage, and the summary metrics from TradingView. Ask the model to separate confirmed facts from interpretation and to flag any metric it cannot verify directly. The analysis confirms the important facts. 180 trades, net loss of $34.18, profit factor below 1, negative average trade, and an 8.74% commission load. It also identifies clustered losses and weak follow-through during choppy conditions. The conclusion is redesign and retest, not increase the risk. That is the value of this workflow. It helps us reject a weak idea before live money is involved. Keep backtesting can test a longer history, but availability depends on TradingView access, the selected symbol, and the current account session. In this recording, the interface opened, then returned a not allowed error and produced no report. I am leaving that result in the video on purpose. It does not invalidate the regular strategy report, the CSV export, or the rest of this workflow. Use bar replay for a manual forward style check. Move back to an earlier date. Hide future candles and step forward one bar at a time. Watch whether signals appear only after the candle closes and whether the strategy behaves consistently in trending and sideways conditions. Finally, connect paper trading and run the strategy in real time without real money. Check alerts, fills, spread, and execution behavior. Automation should come only after code review, a realistic backtest, out of sample validation, and a paper trading period. A backtest is a simulation, not a promise. Every prompt used in this tutorial is available in the full article linked below. Every core step was tested, although some features can vary by plan, account, or market access.